Thank you, Mr. Chairman, and thank you very much for holding this hearing. Thank you, Mr. Stipano and Mr. Ashton, for coming here today. You know, over the last few months, Congressman Elijah Cummings and I have requested documents from your agencies regarding the basic data and the processes of the independent foreclosure review. We made 14 specific requests to you in January, and despite multiple letters back and forth and multiple meetings, you have provided only one full response, 3 partial or minimal responses, and no response to 9 of our requests. You've provided little specific information on what the review actually found, such as the number of improper foreclosures, the amount and number of inflated fees, or the extent of abusive practices by each of the mortgage servicers. So I'm hoping in this hearing to give you an opportunity to provide us with some greater clarity than you've thus far offered in our meetings and our correspondence. Thank you. I want to turn to another aspect of the independent foreclosure review. Earlier this year, your agencies entered into a settlement with the mortgage servicers based on their foreclosure practices, and the settlement was for about $9 billion. And at that time, your agency said that they achieved this number, arrived at this number, based at least in part on the fact that servicers had made mistakes or broken the law in about 6.5% of the cases. Now, I assume if you had believed that the banks had broken the law in 90% of the cases, that you would have settled for a much larger amount of money and that the homeowners would have been paid more, and that if you had found that they broke the law in only 1% of the cases, that you would have settled for less money and the homeowners would have been paid less. Is that basically right, Mr. Ashton?
Well, Senator, at the time the board accepted the settlement with the servicers, we had some preliminary error data. It was preliminary. We also had other data available.
Oh, I understand that.
And it was only one of the factors that we took into account.
I understand, but the question I'm asking is if you had believed at the time you were putting the settlement together that in fact the banks had broken the law in more than 90% of the cases, presumably you would have settled for a lot more money. Is that right?
I think that the error rate was a factor. It was not the only factor.
Okay.
I think
it's the only factor, but it certainly would have mattered if you thought that the banks broke the law 90% of the time as opposed to, say, 6.5% of the time.
That's true, but there were other factors that led the board to accept it, especially the delay that would have been.
Fair enough, I understand the delay, but it matters how many homeowners were the victims of illegal practices by the banks in terms of determining the settle amount, does it not?
Well, the approach that was taken in the settlement agreement really is focused on trying to get cash to the borrowers as quickly as possible.
But the question is not getting cash to them, $300. The question is getting the right amount of cash to the right people, the people who are the victims of illegal activities of the banks. Is that right?
So the settlement agreement is not based on findings of individual injury. It's a different approach. So we gave up looking for individual injury and decided. So
I read your press release at the time that this came out, and you said one of the things that your agency and the Federal Reserve said is that the banks had broken the law or made errors in approximately 6.5% of the cases. And my question is, if you had found that they had broken the law in 90% of the cases, would you have demanded more money from the banks?
It would have been a factor, I believe.
I'll take that then as a yes. Because what I take it to mean, since you used it in your press release and since it's relevant to how much money the people who've been injured are going to get, that the number is critical. It tells us how much illegal activity there was and how much the bank should pay. The problem is that the 6.5% is not accurate. Your staff admitted to us in a meeting earlier this week that the number is not based on a random sample, not on a review of these cases. It was determined based on whatever files had been reviewed by the time you shut down this process. And then it gets worse on the numbers. A few weeks after announcing the settlement, your agency revised the 6.5% number down to 4.2%. The Wall Street Journal reported that the error rate, that is the rate of breaking the law, was, or making mistakes, was 11% at Wells Fargo, 9% at Bank of America, and there are reports that the error rate at JP Morgan Chase was only 0.6%. In other words, the 6.5% number was just a made-up number. So Congressman Cummings and I have asked for information about how you came up with the number. We still don't have enough facts to check it. But the question I have is, what is the right number? Is it 0.6%? Is it 6.5%, 9%, 11%, 20%, 50%, 90%? If you can't correctly tell how many people were the victims of illegal bank actions, how can you possibly decide how much money is an appropriate amount for settlement?
Well, Senator, I think I can only reiterate that the decision that was made to accept that agreement, and we recognize that that was not a perfect agreement, was based on the delay that would have been involved in any alternative to continue the independent foreclosure review.
Mr. Ashton, I'm sorry. I understand the point about delay, but it doesn't mean you pick a number out of the air. The number has to be based on at least some understanding of how often the banks engaged in illegal activity and how many homeowners got hurt. And you needed some way to estimate that to come up with a number. Is that not right? To estimate the number would have required, with more precision, would have required additional delay in providing, and so the decision was made not to go down that course, not to continue the independent foreclosure rule, which we could have done, and instead to accept this settlement, which resulted in payments to borrowers in a much quicker time frame. Mr. Ashton, I can't believe that you are saying that the only reason the number $9 billion was settled on was so that it could be done quickly, and that you're saying that the OCC did not have an estimate in mind of how many banks had broken the law and how many homeowners were the victims of illegal activities. Mr. Stipano, is that the case for the Federal Reserve Bank as well?
Yeah. Senator, I am not an expert on the IFR settlement. I was not directly involved in it. I can answer general questions, and I'll do my best to do that. My understanding is that when it comes to the error rate, I don't really know how it's calculated, to be honest. There are people in my agency who do. They're not here. I do believe that we did review a substantial number of files.
I'm sorry, Mr. Stipano, we met with your staff.
Yeah.
And your staff has made clear you did not review a random sample.
No, it wasn't a random sample.
And without a random sample, can you then generalize to the accurate number, even an estimate, of how many banks broke the law?
Not in my understanding is not in a statistically valid way.
Okay, that's
However,
no.
But can I finish though? I do think that the review of 100,000 files plus is not valueless. I mean, it does inform your decision to some extent.
So you're telling me it's not a random sample, but you think you know something.
It has some value.
And what is it that you know, since we've seen different numbers reported?
I'm assuming that's where the error rate came from, but I'm only assuming, Senator. I was not involved.
So if we are to draw an inference from those 100,000 files, it seems to me we need more information about the 100,000 files. That is, how they were drawn and how much illegal activity was found in those files. Is that accurate?
I think that's accurate.
So far, you have not given us that information.
Yes. As I stated earlier, Senator, there are processes for us to provide confidential supervisory information to Congress in its oversight capacity, and we're prepared to follow those processes.
So let me just make sure I understand this completely. I want to know on a bank-by-bank basis the number of families that were illegally foreclosed on. Will you give me that information?
Eventually, we're going to issue a statement to the public where we provide additional information, but if we go through the processes that I described previously, we can share it to Congress in its oversight capacity.
So you're saying you will make that information publicly available?
I did not say that. I said that we're planning on issuing a public statement that wraps up the IFR and
That's
provides
not what
additional
I'm
information.
asking for.
Yeah.
What I'm asking for is a bank-by-bank analysis of how many families they illegally foreclosed on. Will you give us that information?
We can provide that to Congress in its oversight capacity if we go through the normal processes that we're prepared to follow.
And why are you not making that public? I just want to make sure I understand.
I don't know that there's been a decision not to. I think that we're still evaluating what we're going to release publicly.
Are you claiming that the information about illegal activity is privileged and confidential?
It's all part of it is all confidential supervisory information, but that does not mean that we won't at some point release some of that information. That decision just hasn't been made at this point.
So you're saying when you find evidence of illegal activities by the banks, when they have illegally foreclosed against homeowners, that information is privileged and you will not release it without a letter from Congress?
If it is derived from the bank examination process, yes, it is.
How else would you get it?
Well, sometimes you get information through third parties, through outside sources, but in this case, that's not the case. So
unless someone throws a rock through the window with this information tied to it, you will not release it? Is that what you're saying?
To the extent that the information is confidential supervisory information derived from the exam process, it is subject to privilege. We don't ordinarily make that public. However, in this case, we do plan on making public issuances describing further findings and further analysis of the process.
On a bank-by-bank basis of illegal activity?
I don't know if that's been determined yet.
All right, so let me ask it from the other point of view. You now have evidence in your files of illegal activity, I take it, for some of these banks. I get that from the evidence you've released about the charts, who's going to get paid what. So if someone believes that they have been illegally foreclosed against, will they still have a right under this settlement to bring a lawsuit against the bank?
Yes.
All right. Now, if a family wants to bring the lawsuit, you're both lawyers, would it be helpful, if you're going against one of these big banks, would it be helpful for these families to have the information about their case that's in your files? Mr.
Yes.
Ashton?
It would be helpful, obviously, to have information related to the injury. Yes, it would.
Okay. So do you plan to give the families this information? That is, those families that have been victims of illegal foreclosures, will you be giving them the information that's in your possession about how the banks illegally foreclosed against them? Mr. Ashton?
I think that's a decision that we're still considering. We haven't made a final decision yet.
So you have made a decision to protect the banks, but not a decision to tell the families who were illegally foreclosed against?
We haven't made a decision about what information we would provide to individuals. That's true, yes.
Mr. Stipano?
We're in the same position.
So I just want to make sure I get this straight. Families get pennies on the dollar in this settlement for having been the victims of illegal activities or mistakes in the bank's activities. You let the banks, and you now know individual cases where the banks violated the law, and you're not going to tell the homeowners, or at least it's not clear yet whether or not you're going to do that?
We haven't made a decision on what we're going to tell the homeowners.
You know, I just have to say, I thought this was about transparency. That's what this is all about. People want to know that their regulators are watching out for the American public, not for the banks. And the only way that we can evaluate whether or not you're doing your job is if you make some of this information publicly available. And so far, you're not doing that. And without transparency, we can't have any confidence either in your oversight or that the markets are functioning properly at all. So, and that people are going to receive proper compensation for what went wrong.